NFP Day Warriors. I think a lot of things hinge on what happens here after yesterday's debacle in jobs. I, I believe we should probably be looking for a week report. So let's see what the number is. AJ, how are you? Glenn, Mike, K-Man, how are you? I don't think Ryan's here. James, RJ, Brand, how are you? Thank you. Steve, Ingmar, hiya Blake, and Will.
Morning, coach.
Good morning. How are you, Kay?
Yeah, very good. Ryan will be back tomorrow, I think, but then you guys are closed. But I think he should be back soon.
Okay. All right. So let's take a look at what's going on. What's a whisper number, or what are people looking for on this headline?
Somewhere 110, 120 before the ADP hit. But I guess a lot will be now either hoping or thinking it comes in lower.
Actually, I was talking to Chris Weston, and good morning, guys,
Good
by the
morning.
way. I was talking to Chris Weston last night, and Bloomberg was saying the whisper number post ADP was at 95,000.
Okay.
Yeah.
All right. So, I mean, that really was a shocker yesterday, which, was kind of interesting action with that kind of number, how, we came out of here on from 420. I saw a video yesterday, and I don't know, K-Man, you probably follow things like this. It was about what happened in the repo market on the 30th. And yeah, and sometimes there is a lot of demand quarter end, month end, that type of stuff. But there was a big number that actually had to go to the Fed window.
Mm.
Okay, did you see that? And
No, I haven't seen that video, Dale.
well, I mean, not the video, but
No.
that happened. And I think it was Dario. I forgot Dario's last name. He
Mm.
used to come on here a lot. He talked about it. And that's an indication of stress because banks don't like to have, the world know that they have to go to the discount window.
Yeah, but
Because,
there is a
uh,
rule in place now that once in a while they have to go.
oh, okay.
And I don't know whether it was an outside number. I haven't seen it, to be honest. But this one of the Fed rules is that they to avoid stress, etc., in the system is that they have to go to the discount window from time to time.
Yeah, this was a big number because
Okay.
it was represented by a straight bar, and we haven't seen anything like this in
Mm.
quite some time.
No, that's
So
interesting.
anyway, so basically it means there was a shortage of dollars, right? Because they're borrowing dollars.
Um,
So no,
yes, but can it not be somewhere that you borrow dollars, then you place them elsewhere?
for
I
just
don't know whether
overnight, for
I
just
haven't.
over.
Yeah, I mean, has that money come back into the system afterwards? I wouldn't know. I haven't seen the story at all, Dale. Sorry.
Okay. All right. Well, anyone out there, you may want to check it out because basically the narrative was that it could be the beginning of signs of stress in the system. So anyway, we're at a real important point in the bond market. I've had this level drawn for a long time, and we tagged it this week, and we have an uptrend that comes in right around 87. It kind of looks like make or break in this formation in the next couple days. Over 88 and a half, it's going to look pretty good, but back under 87, it breaks this grinding corrective. I don't see any impulses in here at all. So keep your eye out on these two levels, 87 and 8.5 for the next direction in the bond market. So we'll see what happens there. Um, anything can happen today. I'm still long dollars and we'll see. The only thing I do know is if they do take it down, it's not going to confirm. I mean, even if they take it to 95, which is another equality target down there was 95, but we'll see because this was a confirm low, right? But we take it down this time, it's not going to take out 30, which is the missing link because on the daily, um, you have pretty glaring divergence, right, between the April low and right here. So we'll see. I think it's a big day for everything. Is with currencies, rates, big number for across the board. So we might get some resolution to some things. Haven't seen this in a while. Gold down 11, silver up 28. Gold silver ratio checking. Just maybe we're going to break down for another leg. I'm not sure about that, but definitely silver acting so much better. Now, if we make a new high, it's not going to confirm here either. It did appear on these two highs. So a lot of things going on. Um, maybe the euro pound. I remember a long time ago when I liked euro pound down here out of this wedge. Greg had an 86.5 target for euro pound a month ago. So that's been achieved. It's a lower high, even with the dollar making new lows and euro making new highs. So, but
And
EG's
by the
not
way, the
making new
euro
highs.
sterling just completed a bull flag pattern as of yesterday. So
Okay, some
I mean,
confluence there.
yeah.
Okay, so I wouldn't be long euro pound
And
right here.
speaking of which, we do have Grega here today.
Oh, okay. All right. Well, come on in here, buddy.
Hey, I'm here.
Okay.
How are you
Uh,
guys?
all right. So I'm going to surrender my TV set to you, and you can go ahead and take us through what you're seeing going into the number wizard.
Yeah, I will try to be very quick because, as you know, we have important data coming out, so I'm sure that the team, or especially Blake, wants to say some things here. So firstly, looking at the US yields, we are still just consolidating. I still assume that maybe there is a bit of more weakness for the US yields, but then I am expecting that maybe after summer we will try to complete this consolidation, and maybe that will be the time when we could finally find a new swing low here on the dollar. For now, dollar obviously is still in a downtrend, but let's not forget that if maybe Fed would really have to cut rates like they did maybe back in September 2024, back then when they finally done it, we have seen a strong reversal here
Yeah.
on those markets. So maybe we'll need something similar like now. The sentiment will play the important role here, especially if we consider that dollar has made a pretty nice move to the downside so far, and even if they cut, maybe there won't be much of the downside. As I think that we are trying to complete this higher degree 5-wave drop down from January highs. As I discussed last time, A to C target is around 95. I think that's a
Right.
pretty important level, but still, that's a bearish trend until it's not, right?
Yeah.
We have lower highs still in the making here with lower lows. So of course, this wave 5 is still not constructed by 5 subwaves. Also, now when it comes for trading for the next few days, I just think that no matter what the number, well, if there won't be any kind of a real big surprises here, I just still think that there could be some reversals happening later in the US session. So even if dollar would print the new lows, I would not be surprised if we'll try to stabilize ahead of the US holiday and extended weekend. So, and also we have risk ahead of July 9th deadline regarding tariffs. So my assumption is that market could be a bit choppy and maybe even reverse some of the NFP
That,
moves.
if you get a four like that, Greg, that would even build the case momentum wise uh, for new lows will for sure not confirm. So there'll be like a lot of momentum, and that's what I was talking about before I turned it over to you. That's the other target
Yeah, and
that you had for equality
yeah, and
down
you
there.
have, I mean, if we get any kind of a rally here, I would be careful around 97, 70. That was the previous swing lows, and also some gap here in the middle as well.
Okay.
So I think that's a pretty important and big level. But as we said, I mean, we could be in a very late stages of a hard degree trends, but you know, the trend is still here. So no reason
Right.
to fight just yet. Euro dollar, obviously 119, maybe even 112 level could be the important, but still, I mean, very strong resistance levels for this summer. Looking maybe at some of the stocks indexes, Nasdaq 100, we are trading at the highs. Looking at the smaller 5-wave degree, coming into some very extended targets here of a wave 3. So maybe there is going to be some pause during the summer, I believe. Also, real quick, looking at silver, trying to come out of this bullish triangle. So keep in mind that triangle occurs prior to the final move within a higher degree impulsive sequence. So when there's a lot of choppiness, a lot of traders will firstly be frustrated, then finally try to catch the breakout. And if this will, normally they will try to catch the breakout at the new highs, and usually that's the 5th wave. So once we see a new highs, especially if we get closer to 38, maybe 38.50, these are the triangle measurement targets. I would be very careful up there, as I think that this extended lag here from mid-May could then come to an end. But for now, I still prefer silver over
Silver.
gold.
Yeah.
Yeah, as you said yourself earlier, gold-silver ratio is making a very nice, beautiful reversal to the downside. Even gold obviously can still reach the upper side of this triangle, but we're not really breaking out here. Silver has a completely different picture. And
Hey, Grega, before you
Yeah.
wrap up, can you make sure you give us that S&P wave count? I mean, are you seeing the S&P up at 6,500 like I am? Is that still? I know we can look at Forex Analytix and see your work there, but
I forgot to show you. Okay, here.
that's okay.
Okay, there it is. So basically, I'm still expecting some retracements here to retest the previous swing lows. I mean, it's such an overextended lag here that, I mean, I'm pretty nervous up there. Of course, I know that stocks, as you know, when they start moving, they are keep moving. But I prefer to wait on this retracement. If we break this lower channel, then I think that this correction is something that we should be aware of here in the upcoming weeks.
What if it
All right,
takes
thank
out
you.
5920? Because that was a big area.
Yeah,
Even if you look to the left, that
here,
5920, yeah.
this whole area.
Yeah, that's when we broke down. Yeah.
Yeah, I agree.
So
Very nice support on this dip. Even if you look at NVIDIA, here we also have very nice extended wave 3.
yeah.
Maybe slightly moving into extended targets here. But again, we are waiting and think that with this wave 4 obviously could show up in the next few weeks. So that's something I would personally also pay very close attention on, because I think that there's still a very nice upside targets.
Okay.
Finally, maybe Bitcoin cryptocurrencies have made a very nice moves. We are breaking this channel right now on the Bitcoin. But looking at liquidation heat map, notice these yellow boxes, lines. I mean, they represent a lot of stop orders from those who are short. So these liquidations around 111,000 could possibly cause some retracement in the near term. This means that maybe Bitcoin could slow down a bit, but if you are looking maybe at the Ethereum, keep in mind maybe also on Ethereum dominance and compare it with Bitcoin dominance, meaning that flows can change, can move out of Bitcoin into the Ethereum. You can see the negative correlation there. I mean, the flows that change in the mid-May. And I think that we have a very nice constructive recovery reversal here on the Ethereum dominance. And as I said already last time, we have a pretty nice head and shoulder bottom formation. So I think that there is a plenty of room of more gains on the Ethereum. Let's not forget on this unfilled gap here around 3,200, which I think it's still a very solid target for the next few weeks, maybe months. It really depends what kind of a moves we will get through the summer.
Okay. All right.
So
So
that's something that I'm watching for. But as I said earlier, I really would not be expecting any kind of a sharp break to the upside, let's say on the euro dollar. I think that highs could be retested today to maybe to pick up some stops that are at the highs, especially around this important event. But then because of holidays, I think that market could again come back to the downside.
okay. Some nice looks. Anything on, oh yeah, we did yields. Okay. Uh, let's see. I think you've covered pretty much the board. Oh, anything on WTI, Grega, really fell apart. Okay, so setting up a rally to sell. Okay.
Yeah, I mean that's a pretty nice impulse
Yeah.
down. Maybe it will be the period of consolidation whenever we have a lot of volatility on both sides of the markets. Market could slow down a bit, but I still think that there is a very nice strong resistance around $69-70. Way be rally.
You don't do you do work on that gas?
Yes, occasionally. I don't have
Okay.
it here. I don't know
Okay.
which layout, but as I know, it's coming to the downside.
Okay.
Yeah, and I'm looking for lower prices.
Like 2.5?
I will prepare charts for the next time. I'm just
Okay.
scanning through
Cool.
some.
All right.
Okay, just remember me next time. I will make sure
Okay.
to show it. Okay.
I will. All right. Thank you, Grega.
Okay, thank you.
All right.
All right,
Good
thanks,
luck.
Greg. I appreciate it. Hey, I'm going to get us prepared for today. We got to talk about all situations, but before I do that, let me just mention a couple of things. Make sure you check out and sign up for our, coming soon. This is our coming soon page, so you get notified about trading analytics. It's going to be released here in the next couple of months. Put in your name, email address, get on the mailing list. You're going to be entered to win a trader funding program giveaway. We're giving away two in the month of July. Just double check, make sure you're in there. So just put your name in, put in your email address, and then you're going to get on our weekly newsletter email list. And that's it. We don't share with anybody else, but do that because one of the perks about trading analytics, I'll tell you guys when we do launch it. If you are a subscriber of Forex Analytics, you're going to be able to use trading analytics before everybody else. Plus, you're going to get, if you're on the mailing list, you'll be notified of some of the features that we're going to be adding. We're going to be slow dripping out some of those features to you via the newsletter. So make sure you do that. All right. One things I did want to talk about that's happening right now. We do have this reconciliation bill, the big, beautiful bill. It looks like it's going to pass. It looks like they're actually going to meet this 4th of July update or timeline and deadline is what I meant to say. It's still early in the morning here for us, isn't it, Dale? Anyway, it should be hitting Trump's desk. He's going to sign it into law, and it's very controversial, but there's a lot of front-loaded spending. And if you want to talk about something that give the dollar a little bit of a boost, especially if the data is not bad, and that's the thing that I want to talk about is everybody's expecting weak data. We got the ADP last night. Trump last night told the world on True Social, Jerome Powell should resign immediately. And those of us that, we sit here and we speculate, holy shit, does he actually have the data right now? We don't know. But I wouldn't be surprised if he does. And I
But
think
that
that
wasn't
freaked
why.
out. Oh, what's that?
That was not why. He said he should go straight away. That was because the FHFA guy said he wants Congress to investigate.
Yeah. No, I know, but he's been saying that actually for days. Pulte has been saying that for days, and yes, he's actually said that multiple times. But last night, people are speculating, hey, maybe he has the data before everybody else. He is the president of the United States. Anyway, needless to say, the dollar is already weak, and it's kind of freaked out a lot of people. You have the dollar sitting on its lows. I am not in that camp, and I'm not in that camp that the data is going to be necessarily horrible. But I think the market is prepared for it. So the reason why I mention all this is because if the data does not just if it comes in better than expected, we could actually have a situation where we have the dollar squeeze. And if you look at some of these dollar pairs, you look at what the dollar is doing. I'm going to take you over to just a couple of things that I'm looking at. The dollar CAD, right? We have not hit a new low. Now, I was long. I took a loss actually in the dollar CAD this morning because I don't want to have any dollar positions. But look at how we might create a higher low. The dollar Norway, this one's setting up for an inverted head and shoulder pattern. Dollar MEX is literally just pips away from previous support, which if we break 1880 to the upside, it's going to squeeze. I played this thing long 3 times this week and made money every time. The dollar MEX does look like it could squeeze. So you start thinking, what will the dollar look like if we have data that is better than expected, especially after liquidating all those dollars yesterday post ADP? Look at the US dollar Swedish krona, similar to the dollar CAD, false breakdown, but now we're trying to create higher lows. Now, I'm not saying that the dollar is going to rally today, but if it does and the data is decent, there are opportunities. Now, one of the things that I hope happens today is the dollar, we actually get weak data and the euro actually makes the jump towards 119 and change and gets to that harmonic completion around 120. This is going to be a big triangle pattern. I've been talking about it during the week ahead video last week, even a week before that, looking at upside targets around 120. If we get anywhere close, I am going to be buying the dollar because if the data is weak, that means that the stock market, you saw the price action yesterday post ADP. If we have weak data, let's say we actually lose jobs and unemployment jumps up to 4.4%, the stock market's going to get hit. And if the stock market gets hit, I would not put it past the dollar to have a knee-jerk reaction where it sells off first and then you get a risk off bid, and the dollar hasn't seen a risk off bid in a while, but we are at levels that I think the dollar could reciprocate and see that type of price action. So if we get anywhere close to 119 today on weak data, I'm actually looking to go the other way. K-Man, I know you've got a lot of thoughts ahead of the data. We only have a few short minutes. So what are you looking at today? What's jumping out at you? Because I look at the dollar yen. I know you look at the dollar yen a lot. This is a really tight consolidation here.
Buy
Yeah,
a
but
break.
dollar yen is held up by the yen process. I think it's a completely different thing in the dollar yen right now. It'll move on the NFP, but look at the yen crosses how big they are, and that's because of the US-Japan trade that hasn't been done yet. Well, for several reasons. Bit of a
Donald Trump hasn't gone to a set of golf clubs.
yeah, and I mean it's a bit of a deaf man's story both sides of the table now. But no, I think the surprise trade for today is a better report because the market is expecting a weak one after the ADP yesterday. So I'd argue that if the report is good, the move may be larger because also of the positions in the market. So we could go and have a look if you go back onto euro dollar, for instance, perhaps even we're probably going, if the report is good, we're probably going to dump through that 117, 45, 50 and have a look at 116.80, 116 and a half maybe. But if the report is bad, that will confirm what the dollar bears want to see, and it will mean that the report is worsening before people actually were expecting, which is rather August or September data. So yeah, I think it can be a bit binary, but yeah, I think the initial bigger move will be if the report beats expectations, right?
Yeah,
But
100%.
I won't personally counter trade if the report is bad because the rebalancers, the diversificators, or whatever you want to name them, they will have a bone to chew on, and say like, see, the situation is worsening now, and that is probably going to push people to expect more Fed rate cuts.
So
Or
what
July.
pairs are you specifically focused on today?
I still think euro dollar if the report is bad, because I still think the euro is one of the better performers if the report is bad. If the report is good after the sterling debacle yesterday in the British Parliament, I think the cable is one of those who can drop probably the most, because okay, I mean, Starmer has given a bit of support to Reeves, and Sterling has been coming back, but the worries are far from over. And so if the report is good, I would say Sterling is the one that has the better chance um, to drop the fastest.
It really has underperformed, hasn't it? I mean, you look at what the euro's done, and
We
I
warned
mean,
for it.
what's that?
We warned for it. We said like, oh, okay, the sterling has been doing really well for weeks and months, and now maybe the love with the sterling is coming. We didn't know what was going to happen yesterday, but
Yeah.
it's coming a little bit to have ran its course, and that's why euro sterling started to do better.
All right. Well, we have, thank you, K-Man, for your thoughts. We have Steve here. Steve, do you have any thoughts going into the jobs report today? And good morning, Calimera. There you go.
Good morning, mate.
Good morning.
As I've told you before, I'm very doubtful that we are likely to see a big miss. Can we see a miss? Yes, absolutely. But I doubt we're going to see a big miss. So my main case scenario, although I don't like this kind of guessing game, to be frank, is that we're probably going to get something rather indifferent.
Okay. So what would you be focused on today?
I want to see what's going to happen with the dollar. We saw a reaction from a nice technical juncture yesterday. I want to see if today is going to be the trigger event for a continuation, or that's going to completely fail after 24 hours.
Well, and one of the things Dale and I have been really talking about, well, we all have, but one of the things that I know we've been looking at for a long time is this long-term trend line support. This goes back, and this is the dollar index, goes back to 2011. Remember, Dale, how long we've been like, okay, when we hit 96, which we're almost there, it's gonna be the make it or break it level, and this is where we need to be very careful with the dollar. And we're there, Dale. So I think this is gonna be pretty critical down here. So on a miss today, if the data misses, my assumption is we are going to trade back down towards 96 to a fresh low. But if we hit a fresh low, like Grega's pointed out, we've all been talking about, that's going to be very divergent relative strength down there. I'd be very skeptical about chasing the dollar to the downside at this point. What do you think, Dale?
Yeah, at any point right now.
Yeah. All right. Well, we'll see what happens with the dollar. And guess what? I've actually set everything up on my other screen. So let me bring it on over. This is for the data. So since gold's looks so vulnerable and it hasn't moved a whole lot, I'm going to put it over here to the left because if we get strong data, I mean, yes, you're going to see the dollar index, which happens to be over here on the right. You're going to see that go higher. The S&P, we'll see how the S&P will respond. But I'm going to put those. This is our three charts that I'm going to keep up over here. I'm going to go over to Forex Analytics, grab our data flash, which is you can find it over on the tab that has the calendar. All right, so your data calendar. So here's your data flash. I'm going to move that over. Overlay it across the top of three pairs. And we have less than 30 seconds. Here's all your data, guys. I am flat as a pancake going into this data, but I'm ready to react. I don't know about you. K-Man, final 10 seconds.
Traveling extremely light right now. And yeah, ready to see what's gonna go on this number. Overall bias for me unchanged. I'm still longer term bearish dollars, but let's see. I mean,
Okay,
10
Dale,
seconds.
less than 5 seconds now.
Well, watch TLT, those levels I gave you. It's could be decisive, make or break day.
Here we go.
147.
Oh boy, oh boy, oh boy, oh boy, oh boy.
Let's
Oh,
celebrate. Let's
oh
celebrate
boy.
until the day that the revisions come and we find out that this 147 was actually 67.
Yeah,
I'll take it.
but dude, this is oh man, I went long US dollar Norwegian krona, guys.
I
So I
told you
just
Yeah.
don't bet against these
Well,
reports. They're heavily toyed around with.
yeah, I mean, dude, yeah, I mean, come on now. All right.
all right.
And
So
there we go.
what are yields doing, Blake? You have a look?
Well, let's take a look here, Dale.
A bit higher, a bit higher.
Yeah, yep. We got a
Yeah,
lot
that
of auctions coming up, and
yeah.
remember, we have a reconciliation bill coming our way. That's what's
Yeah,
happening.
that's this. So if there are problems in the repo market, and the sulfur rate really supports a dollar recovery over euro, and people have been talking about that for a few months and been wrong. But if we already have rates going up on this news, and there's some liquidity issues between banks, this should only exacerbate it. If it just wasn't a one-off, you know what I mean?
Yeah.
So just thank you for the number, Blake. Uh, I'm ready for some fireworks tomorrow.
Me too. I'm ready for fireworks as well, guys. So, and look, and by the way, the S&P, this number is we're gonna cream higher. So, yep.
6280.
Huh?
I know a guy has 6286 and then a correction.
Well, the
We'll see.
261% extension, just
Is
so
that
you
where it's
guys can
at?
all see it, it is at 63. Hold on, let me just pull up the chart really quick. If you have Forex Analytics, you can just go reference there too. It is, let's get over there. 63.26 would be the 261% extension. So seems like that's where we're going.
Yeah, real nice candle on the daily in the dollar.
Yeah.
Almost a reversal week.
Yeah, almost. And I wouldn't want to be short. I wouldn't want to be short the Swissy. I picked up some dollar CAD. I picked up some dollar Norway. I wanted to pick up some dollar MEX. I haven't done that yet, but I'll do it when you guys go on your interview here. So, guys, good luck. It's good, and remember, it's a long weekend, and this is the type of data that now that it's out, you're gonna see that drift throughout the course of the day because people are like, oh, fuck. I'm not long the dollar, and I got out of my dollars yesterday. You're gonna have some positioning going into that into a really illiquid time, and so yeah,
You
and
know, Blake, I normally
yeah.
flatten out on big numbers like this too, but I just felt that we're so close to what could be an important pivot that, and if it made a new low, I was going to add because we'd have divergence that I sat through a number. But, I don't recommend people do it. It's really got to be an unusual circumstance to be positioned into a binary roulette bet.
Well, that's
That's
it.
all it
You're
was.
just betting, and we don't bet as
Yeah,
traders.
yeah,
We don't. And
yeah.
that I know a guy, he's like one of the head retail trading, analysts. I've been watching him for a quarter of a century now, and many of you probably know who the hell he is. And that guy is notorious for he would just put on a trade just before the data, like literally a couple minutes. And I'm like, no wonder the retail platform made him his chief currency strategist because he got everybody
Yeah.
gambling right ahead of data. It's like that's so silly. Like you are not a real trader when you do that, and it has to be a very good situation in order to do that, where the probabilities are definitely stacked in your favor. So I know you normally don't do that, Dale, and nor should you.
Yeah. So, I got lucky. And I will say that. Lucky. All right.
Probability stacked in your favor, like the BLS pampering the numbers.
Yeah, I mean,
Yeah,
hey, there you go. Steve wrapped
that's
it. Yeah,
playing, on the side of the casino, right?
Yeah.
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 I mean,
Yeah.
you are. I mean, you are. Dale, Steve has been telling you the whole week. Numbers can't be bad.
Well, I mean,
So
they
Yeah.
can, but even if they're bad, they're going to be a lot better than they will end up being a year from now when they revise them lower.
there you
Okay.
go. Hey, I
Oh,
know you have your guest here.
yeah.
Pavel's here. So
Pavel's
I
here.
just want.
Yeah.
Hey, Ryan's going to be here tomorrow. Are you guys doing the flow show tomorrow, K-Man?
Yeah, we should do. We are not closed, so we will have a flow show tomorrow. I haven't heard anything that would infirm that thing. Yeah, no. I think we will. Yeah.
All right, great, great. So, despite setting off fireworks tomorrow, more than we just got, I'm going to look forward to enjoying the time away. We will not have the face show tomorrow because it will be 4th of July. But make sure you guys are tuned in to the Flow show tomorrow morning with Ryan and K-Man. Ryan will be back and helping K-Man out. So, thank you guys, and thank you, Dale, for guiding us through here today and every day.
Thank you, guys. Thank you, Kay.
Thank you, Dale.
Thank you, Grega. Thanks, Blake. Have a good holiday tomorrow. And, you know, I think that we prep people as well as we could this week. Some real nice calls. And, yeah, enjoy the weekend. See you
You do the same,
Monday.
sir.
All right. Now I want to talk to Pavel. Pavel,
Uh,
welcome back. How are you?
yeah. Hi there. I'm fine. Do you hear me?
Yeah, I hear you. Thanks for your patience.
No problem.
Uh, okay, so great to have you back. And I think I caught in your feed that you like natural gas now.
Yeah,
Eh,
that's true. I want to
Okay,
talk about commodities and
okay.
focus on opportunity in the nat gas. Uh, so let's
So
start.
before
Uh,
we start,
mm,
from last time, I think it was a negative call on copper. It kind
yeah,
of went down for a
yeah,
little
it's
while. You're
exactly.
still
And
negative.
I'm leaning bearish still because that is something I want to talk about today. But to make the matters clear, I was plainly wrong. I was wrong about copper, and I was also wrong about the dollar. I mean, I was not making any short-term calls, so I was
Yeah,
open for some consolidation, bottoming out, but definitely. I was looking for a reversal on the dollar much sooner. So I was simply wrong. And you were correct because you told me that you were looking forward to 96 or 95. And
yeah,
I told you I don't think we will get so low. I was more inclined towards 98.
yeah.
And we're well below that. So yeah,
Hey,
I was wrong. So
all right. Well, you know what? It's great that you say that because a lot of people are just revisionists or they end up having memory issues when things don't work out.
yeah, I mean,
It's like they forgot they even said it. So we're all wrong.
in the
There
end,
isn't
it's
anyone who
it's
does this that isn't wrong.
yeah, I mean, in the end, it's all about the risk management, and when you're wrong, not to hold on your thesis forever and get out with a small loss
And
or
I've
risk
also
manage.
seen you in the zone and come and do, shows for a year and be spot on with what you're talking about. So, that's trading.
Yeah, I mean, the first quarter was great, great for us. We nailed, the gold miners was our topic at the beginning of the year. That was doing spectacular well, and also technology. And we even called the correction in April, the sell-off. So it was fine, but the second quarter, I can honestly say that it was not good for us. I mean, I personally think I was wrong about the second quarter. So let's just let's just
Okay.
call it what
I
it
think
is.
everyone had a kind of a difficult, we saw unprecedented type of moves, a crash and then the quickest recovery in history without any corrections on the way up. So tweets. We had to get used to how things were moving with tweets. So you weren't alone in the second quarter. Goodbye, second quarter.
I hope
And here
so.
we
I
are.
hope so.
All right.
Uh,
So the key word in our business is next.
Yeah, exactly. So let's take a look at the data, and I don't want to start with my biases. So let's take a look at commodities, and I'm thinking about commodities a lot lately. This is the Bloomberg Commodity Index, which is a broad basket of commodities. I prefer to use these indices like the Bloomberg Commodity Index or the CRB because they smooth out the noise. Because if you look at individual commodities, you might tend to focus, for example, hey, platinum is going
Yeah.
vertical, and that's cool, but it's just a really tiny market and it doesn't really matter that much. So these indices are helpful to smooth this out because we all remember similar instances like cocoa
Yeah.
or nat gas before that, and so on. So this shows you how commodities are moving in aggregate. And you can see kind of a round bottom here,
Yeah.
which implies a bullish resolution. But I have to admit that my personal bias is still bearish. Or let's say that I want to see the market to prove me wrong. If we break above this important resistance and break out sustainably, so we retest it or consolidate above it, then I will happily turn bullish. But so far, I think the huge problem or huge drawback for commodities is crude oil, because there is a clear geopolitical effort to keep oil prices lower. And
Yeah.
by the way, we had the perfect storm for crude oil, the war between Israel and Iran. Even the U.S. Went in and bombed the U.S. the Iranian nuclear facilities. So, what's the better scenario for crude oil? And the result was pretty disappointing. So, my logic is that if the crude oil cannot rally even under this perfect scenario. And yes, I'm aware of the fact that the oil facilities were spared and so on, but that's the point. I mean, there's clear incentive for all the players, the US President Trump, Saudis, and even the Iranians to keep the oil flowing. So that I think will act as a drag on commodities, and I'm still leaning towards retest of this 90 level of this support at 90. I can zoom it out. You can see that it's a pretty important long-term level. But
Yeah.
once again, I can be wrong. This is just my bias, and if we break out, I will turn bullish. Another
Does
reason
this
for
index it's only metals, industrial metals, or does it include agricultural like grains?
Yes, it also includes agricultural commodities like grains, also
O-
cattle,
Okay.
and some softs. I'm not sure which one of these commodities is not there, but it's not all the commodities, but the most important ones and the most liquid. So it even includes agricultural
Because the
commodities. And
grains look like they're coming out of the hole to me, and there is a fundamental narrative with Russia beginning to attack things in the Black Sea, which they weren't doing, and that's why wheat was able to get out of Ukraine. All the grains were able to, and this could be plus, weather. We're into, let's see what, we could have a drought condition from
Mhm,
uh, El Nino this summer. But the grains to me, and they've been the worst, right? I
mhm.
mean, they've
Yeah,
been
yeah,
the
exactly.
weakest in the complex, but they're showing a heartbeat to me. But I've been what do you call that? The the boy who cried wolf on grains before. So, are you there, Pavel? Oh well, I lost Pavel. See if he comes back. Anyway, let's take a look around till he gets back. Maybe I'll just wrap it. Okay, so this is what I was talking about in the dollar attacking the 9-day. This is where Grega thinks it could go to right around 98 or so before another decline to the downside for his ultimate target. Look at the end. So my call was I was short early from 4.5, and look at that. And also was talking about yield. So watch TLT, guys. How ironic, right? With I said the pain trade was going to be higher yields because the whole world was looking for lower rates. So there you go. Silver, failing rally, even though it's stronger than gold. It's only down a dime. But look at gold, and people were giving me a hard time because I'm talking 2,700. So I still think 2,750 into late summer or fall. And any questions before I hang it up here, guys? Because I don't think, yeah. Oh, yeah, here are the grains. Let me show you what I was talking about with Pavel. All right, corn actually had a real nice divergence here. Where is it? Yeah, here. Up again today. So, you had a nice 4-hour divergence here. You're getting a nice week. Wheat looks okay. Still a lower high, but it looks good on the weekly. And the beans, we get through here. Take a look at this. There could be a weekly breakout. Let me just move this. Here's the weekly. So what Pavel was saying, and maybe he would have got mad at me because I was talking too much. But you see this $11 level? That could be pretty good too. All right. So any last questions before I say don't just count your pips, count your blessings?
Sorry, Dale.
Oh, you're back. Okay, cool.
I'm really sorry on something. I
Uh,
have a new laptop and the Zoom
All right.
app
All right.
crashed for whatever reason. So
Okay.
I'm really
Yeah, don't worry about it. We could continue this. I kept people entertained. So here I'm going to stop
thank you.
sharing. I'm going to stop sharing and go ahead, take it over again.
Okay, so here we go.
Yeah.
Okay, so I don't know where where I left, but I was talking about the commodities and why
Yeah.
I remain, well, not skeptical, but I want to see more strength from the market before turning bullish, aggressively bullish. Another reason is when I look at metals, we talked about copper last time, and as I said, I was wrong. Copper has been very strong. The same is true for silver.
Yeah.
But one thing that doesn't add up is iron ore, because here we have the iron ore price in Singapore, which is, I think, the best benchmark for global iron ore prices. And you could see that it's been disappointing. And usually these metal prices are correlated on a longer term basis. Yes, in the short term or medium term, they can diverge. But in the long term, if we get a bullish breakout in commodities as a whole, then I would expect iron ore to join the party, and we have not seen this yet. I have just the iron ore price here, and you can see the long-term consolidation and the tight trading range. So either way, this will be a fate, because the iron ore is not confirming the strength in metals or commodities, and the commodities will retrace. Or I'm wrong and the commodities will break out And in that case, I think there will be an incredible rally in iron ore because this
Look
is
at the
so.
compression.
I can zoom out even further, and you can see how low the current volatility, the realized volatility is in iron ore. It's unprecedented. So a huge move is coming. When I take a look at interdelivery spreads in iron ore, there are some bearish divergences. I mean, this is not something that works 100% of the time, and this is also very short-term in nature. But the spreads are bearish, so they imply the price might break lower, and that's also confirming my bearish bias in the short to medium term. But once again, I don't know. I will let the market guide me and to show me what it wants to do. And the key level for me is this resistance on the Bloomberg Commodity Index. So that was iron ore, and the only exception that I consider buying or maybe going long at some point later this month is nat gas, because the inventories in Europe and also in Asia are quite low. They have to be refilled. Of course, in the end, it all comes down to weather. If the weather cooperates and the summer is warmer, then it will be fine and the uptrend will be sustained. If the weather is bad, I mean, if the summer is cool, then nothing could help nat gas. That's all we are aware of. But still, I think many utilities will be buyers if the price drops to a strong support, which is at $3 on Henry Hub and $10 on the European, $10 per million British thermal units for the European TTF nat gas, which is the middle subchart, and the bottom subchart is the nat gas prices in the UK. So I think if we drop closer to that, or maybe even below that support in the short term, then it would be an interesting long opportunity.
Yeah, I'm looking for if you put that chart up again of nat gas, the Henry Hub, if you draw a line from the low in January and then the low in May, just draw a line connecting those two like a trend line.
Sorry, I have that.
There's
Here
your
we go.
Yeah. Okay.
Low in January.
That's what I'm looking for. Oh, that's about
Yeah,
270
that does
or
make
so.
sense.
Yeah,
I
it
mean,
cleans out all the bulls and then we go.
Yeah, maybe,
So,
maybe. I mean, this is a continuous contract, so
yeah.
it's somewhat distorted, but I have the seasonality charts here, and certainly July is usually quite negative, especially the longer term statistics, the 30-year curve. You can see how low it goes.
Into
And
what in August? Look for lows in August.
Lows in August, and even the statistics by month, you can see that the percentage of the time the month finished positive is very low. So July is usually bearish for nat gas. However, if you take a look at the TTF seasonality, it's also bearish, maybe not so much, but it's still, especially the longer term statistics are aligned with your call, with your prediction, a lower low at the beginning of August. So yeah, that definitely makes sense. Even the spreads are pretty disappointing. Henry Hub spreads are quite weak, so this implies a move lower in the short term. And the same is true also for the TTF spreads. They are also quite weak, breaking down. So I'm not in a hurry to jump into nat gas, but I will certainly watch.
You're stalking it.
Yeah, I'm certainly will watch this because I like it, because it's usually not so correlated with the rest of the market, the rest of the energy complex, and even other commodities, which is the reason that despite my bearish bias, or well, not bearish, or I'm not outright bearish, but I'm skeptical. Let's say that I'm skeptical. I think that the nat gas could play out in a bullish way later this summer. Once again, it all comes down to weather, but the inventories and the fundamentals might be supportive. So, that's one opportunity I have on my radar. Other than that, I'm quite in line with your views. I'm bullish the dollar. I'm bearish Bitcoin or crypto in general here. So these are also opportunities, but I wanted to talk about something not so common or that is not on everyone's radar. So I picked nat gas and iron ore, which I think not many people watch on a
No.
daily basis.
Let me ask you this, Pavel. Have you ever noticed a negative correlation between natural gas and stock indices?
Yes. I mean, this is especially true in winter and especially with regard to Europe, because, we in Europe, we decided to build our economy around weather. So if it's winter and it's freezing, then electricity prices go stratospheric. And, it's like we're becoming basically a third world country. Well, it's mostly focused, or it's mostly the problem in the Western Europe, not in the Eastern Europe or Central Europe where I live. But certainly in Western Europe, this is the case. So the relationship between the nat gas prices and European, not just indices but also currency, are well established over the past few years. But it's mostly true in winter. I'm not aware of the negative correlation with the U.S. indices, because U.S. is a huge producer and exporter of nat gas and LNG. So I'm not aware of that, but
yeah, check it out.
I will check it out definitely. But in Europe, this is definitely once the winter comes, you have to start watching nat gas prices in Europe if you are an equity trader or hold euros, because
or just want to stay warm.
Yeah, exactly. Yeah, it's crazy. But once again, it's mostly this craziness is mostly happening in the Western Europe. In Poland or in Czech Republic, people are still sane in this regard. So
I asked Pavel these questions because I consider him a high-level thinker in the markets, and his work is different than most. And looking at spreads, going back to early in my career, some of the best traders I knew were spreaders, and that gave them real good feel for directionality. And you ought to check out Pavel's work. Why don't you show them where they could find you, buddy?
Sure. You can go to our homepage at spreadcharts.com, and we have you can access or gain access to our software, to the app you just saw a moment before, which is heavily focused on commodities, also the commodity spreads, but has also the signals, the sentiment data, and other types of data. And you can sign up and try our app, including the signals and our research, for free, or get a premium version for the latest data and all the features. So you are more than welcome to.
That's 3 months for 119, not 1 month. So
3 months.
Very, very reasonable.
Yeah, we keep quarterly or yearly renewals, monthly. I think because we are focused on longer term analysis, weeks up to months. So it doesn't really make sense to sign up for just 1 month. Maybe
how can you make a decision on anything's value in less than 90 days? Is kind of the most narrow margin.
Yeah, exactly.
You have to give someone at least a quarter to show what they can do.
We have
we
are using the historical end of day data in the app. We do not have intraday data, and sometimes people ask us, "Hey, I want the intraday or real time even data," and we tell them we focus on medium to long-term analysis, and the intraday data doesn't matter at all, especially if you trade spreads or follow the spreads like we. The spreads only make sense if you assemble them on I mean, using the settlement prices, daily settlements, not closing prices, because the close could be heavily distorted by the last few seconds of the trading. So if you want to understand or watch the fundamentals or the spreads, you have to use the settlement data, and that's one of the reasons why we have the daily historical settlements, or we are using daily historical settlements for our data. So that's just about it.
Okay, well, thanks once again, my trading warrior brother, for bringing
Thank you,
your
Dale.
stuff. Yeah,
Thank you, Dale, and
bringing your stuff here.
sorry for the interruption, for the glitch.
No problem. That's live TV, and I respect you and your work. So
me too. I follow you on nearly every week, and my quarter was bad, but yours was spectacular. Let's just say that you were spot on about the dollar and the metals.
Yeah, I get lucky once in a while. So it's a broken
Don't
clock.
be so humble.
In my extremely accurate and humble opinion, I'm a very blessed person in many ways, and so I feel, fortunate I'm glad to add value to people, and you do that, and that's why I have no axe to grind for people to sign up with you. And that's what I love about ForexAnalytix, is that I could bring on people that are going to add value to people that are here, and that we're not trying to be exclusive and control people. We want to give people the best chance to succeed, and I love your
that's
work.
very cool. That's very cool.
Yeah. So have a great weekend. We'll be back together late September. Could be, who knows what kind of world we'll have by then, right?
Yeah, what Trump decides to do or not to do.
Yeah, all of them.
It's funny.
All of them, Putin, everyone. So
yeah.
Ayatollahs and Netanyahu, we'll see. I don't think the ceasefire holds. Anyway, thank you very much, Pavel. Have a great weekend, and we'll talk down the road. I'll send you a DM on the date.
Thanks, Dale. Have a nice day.
All right, everyone, have a great holiday, and remember, don't just count your pips, count your blessings. You can join the team on the Morning Edge in 13 minutes, and I'll see everyone on Monday. Adios, everyone.
Bye.
See you, Pavel.